John Goldsmith, head of Canadian equities from Montrusco Bolton, is still with us here. Brian, thank you, and Brian's going to stay with us. But John, you're taking the heartbeat from corporate Canada, watching how all the companies on Bay Street sure are thinking about this, but just companies across the country. What's been your assessment?
It's the least bad option that the government had. I mean, Brian mentioned they have a certain spending plan that they do not want to deviate from, and as a result, they need to, they being the government, need to raise incremental taxation revenues. The least bad option being capital gains tax that obviously would primarily impact more well-to-do Canadian individuals, small businesses, as opposed to a, call it a profits tax or an excess profits tax that you've seen in a lot of other countries, which would be a very negative thing for the Canadian stock market, especially at a time when, the government right now is looking for ways to increase the ownership of Canadian stocks, one, primarily by Canadians, but also by foreigners. So that would be a real bad way to kind of attract Canada in the eyes of foreigners. But I think, once again, it's the least bad option. I think it's also a very tactful way for the Liberal government to put this up to basically a vote in the next couple of months when the next election is to say, look, we're doing a lot of plans, or we're trying to raise a lot of revenue to address social issues, and we're trying to reduce the divide between the haves and the have-nots. So unfortunately, that's the least bad option available.
And Brian, what do the polling numbers tell us right now about where things stand? Because obviously, at the end of the day, if there's a message that the Liberal government wants to get out there and maybe put a little heat on the Conservatives to make the next chess move, what do we know about how Canadians feel right now about those two respective parties and the economy itself?
Well, there's no doubt how Canadians feel about the Liberals right now, which is not very good. I mean, the Liberals, for about a year now, the Liberals have trailed by anywhere from 15 to 20 points in the polls, which is a huge gap. I mean, that you're talking about a dominant Conservative majority if the Liberals are down by 20 points to the Conservatives. What I believe is happening right now, and I think there's, if you pay attention to the messaging from the Finance Minister and the Prime Minister on this, you can see it. They are trying to recapture some of what they did in 2015, which when Trudeau first ran and won in his first election, they raised taxes on the upper income tax brackets, created actually a new very high income tax bracket in order to cut taxes on the middle class. They're trying to recapture some of that in order to narrow this gap with the Conservatives before an election, which is probably still at least a year away, but we're definitely getting into the time now where it's a minority parliament and an election could come, really any week.
From here. So we'll watch to see what happens on that front. John, I mean, are there other things we could be thinking about if there's this longer term story of how do we make the economy sing and actually benefit everybody over the long term?
A lot of tough questions, and there's no real obvious solutions right now. I think the biggest problem is with regards to trying to address both sides of the divide. Obviously, the easiest way to do that is to enhance Canadian productivity, right? And, Canada has changed their immigration policies over the last couple of years with questionable results. That's ended up having a further strain on the housing market, which is probably one of the most strained in the developed world in terms of the leverage effect that you have. But at the end of the day, it's a question of balancing out, like, what are all the social projects that we have and where are those revenues coming in from? And unless you're able to attract a lot of incremental capital, not just human beings, you're always going to be pretty much running a deficit. And just with regards to the taxes in and of itself, everybody's making a big stink right now with regards to, yes, the inclusion rate's increasing, that's not great. But if we dial it back 40 years, we had an inclusion rate on capital gains that were 75%, went down to 2/3, then ultimately went down about 2 decades ago to about 50%. Now we're back at 2/3. So once again, whoever is able to come up with a better solution with regards to the income inequality between the haves and the have-nots, I think at that point in time, you'll probably see that pendulum. If you can't fix it, the pendulum will swing more towards the 75%. And if you can fix it, then you'll probably go back to that 50% inclusion rate.